Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with this first bullish scenario where we're looking for a 5-wave impulsive structure to the upside where wave 4 is potentially already in and we look for a 5, or we're looking for a bigger corrective structure before then continuation to the upside. The most common target area for a wave 4 is between the 236 and the 05, taken from the low of 2 to the high of wave 3, giving us a target area between 40.3k and 35.3k, and as you can see, the 0.236 has been hit over here. The invalidation for a wave 4 is the 0.618 in case price moves to the downside before taking the highs here, sitting at 33.1k. In the second bullish scenario, we are also still looking for a wave 4, but this is a wave 4 of a higher degree. Instead of a 1, 2, 3, 4, 5, we are now talking about a 1, 2, 3, 4, yellow 4, and then a wave 5 to the upside. So now we have a higher degree wave 4 matching this wave 2 over here, where this impulse is already finished and wave 3 is in. However, when we look at the target area for this yellow wave 4, it is not too different compared to the lower degree count I just showed you with the green wave 4. Just look at the overlap over here between the green box and the yellow box, where in yellow the fibs for wave 4 are taken from the low over here to the high, giving us an area between 40k and 34.8k with the invalidation sitting at 32.4k. You also see fib times on the chart, and this is to compare the time it took for wave 2 to form with the time it can take for this wave 4. Because wave 2 was very shallow, only hitting the 0.382 Fibonacci taken from the low to the high, but it was very long in time, we can expect a wave 4 to be relatively deep and short in time, and that is why I also have the 0.382 and the 0.618 fib time on the chart taken from the beginning to the end of wave 2, put on top of the high of this wave 3. So if price moves to the downside and ends wave 4 before hitting the 1-to-1, wave 4 is shorter than wave 2, which based on the rule of alternation could be something we're looking for, because if wave 2 is shallow and long, wave 4 can be short and deep. The 0.382, usually a minimum target for a corrective structure, is January 24, the end of Jan 2024. Then we have the 0.618 sitting on the 7th of March 2024 and the 1-to-1 sitting on Friday the 3rd of May 2024. If we look at a potentially more bullish scenario, but initially then bearish of course, as we're then looking for the high of green 1 to be in, we're looking for a double 1-2, wave 1, 2, 1, 2, and then continuation to the upside. But that means that from the highs we have here, we want to see a move to the downside, where most commonly a wave 2 is actually short and deep. However, looking more locally here, reaching these lower areas based on the price action we have seems unlikely, with this being the high of a second wave 1. But still, the common target area for a wave 2 is the 05 to 786 area, taken from the low to the high between 34.8k and 29.1k. But the probabilities based on what we see locally here are currently not too high for this particular scenario. And in the bearish scenario, we're looking for an ABC that is already finished, and we're looking for much lower prices to come. But then again, the local price action we have over here, also with the 886 touch, which I'll show in a second, is not really supporting this scenario, and the end and the high already being in, the end of C and the high already in for much lower prices to come. If we then go to the low time frame and we have a look at this range here, then the scenario that would lead to another move to the downside is this ABC or WXY. ABC 535, WXY flat corrective structure in X, and then a wave Y, which can be a flat zigzag or a triangle. You can see the target areas are different between a C and a Y. Wave Y, most common target areas, the 0.618 to the 1.236, and for wave C, most commonly, it's the 1-to-1 to the 1.236, giving us a total target area between 41.4k and 38.6k, as long as this high over here at 44.7k is not touched. And what you do see is that we have touched the 886, which increases probabilities for price to continue towards the upside, and also increases probabilities that any move down is a C or a Y and not a wave 3, because commonly an 886 touch is a higher probability for a wave B or an X and rare for a wave 2, and then a potential 1, 2, 3 to the downside. If price hits the 886 for a second time, it increases probabilities for continuation, which of course lowers the probabilities for this scenario. However, if we also want to finish wave B or X on top of this high here, we have to somehow count this structure as a 3-waver or this structure by itself if we move A or W to the right. And I've done a little bit of digging. The first scenario here for then a wave B or X, right, where we don't want to see the highs taken, we are looking for a move down, is then a WXY. So we're looking for a W, zigzag, X, and then a wave Y in a zigzag as well. Now, in a double sideways combo, W and Y are not allowed to be the same structure. In a sharp zigzag, in a sharp double zigzag, it is possible. But actually in a double zigzag where you're looking for an ABC and then a W wave X and then another ABC in a wave Y, you don't really want wave X to go below the 0.7 as that really lowers the probabilities of a double zigzag structure, and it starts to look more like a double combo where a double zigzag is not allowed. If we look at the wave Y, most common target area, we are currently inside that target area, but for wave C, if we are looking for this to be an ABC to the upside, right, ABCW, X, ABCY, the most common target for C is up here, not down here, and not reaching the common targets area of wave C is very rare. So there's a couple of reasons why this scenario has a lower probability, wave X going below the 0.7, but also wave C over here not yet being reached, or the common target of wave C, while already having quite a long range. And you can see from the low of B to the upside, this range is a little bit of an anomaly, right? If this is a wave 2, this is a wave 2. This is quite a big range compared to the previous one. So let's see how price is reacting if it moves potentially then above these highs. But that would of course invalidate this scenario where we're looking for a bigger 3-wave structure to the downside. Now another scenario is then an ABC in a flat. But that means we got to take the high in a wave 5, not hit the invalidation and move down. Because this is then, right, this yellow wave C is then the high of your B or X, and you are then looking for price to move towards the downside again, right, for the wave Y or C down here. However, what we then see here is that we have an A, B, where wave B on my chart did not hit the 0.9 Fibonacci, which is not what I like to see, because the 0.9 Fibonacci is a minimum target usually for a wave B in a flat structure, and I do realize on some other charts it did hit the 0.9, but on mine it didn't, and I don't like to see that, right? And then we would be looking for an ending diagonal wave C, where all of the waves have to be zigzag structures, right? So wave 1, 2, 3, 4, and then eventually a wave 5. But going above this wave 3, hitting the 886 for the second time, really increases probabilities to invalidate the scenario that we have here, and therefore invalidate B or X, and therefore invalidate this particular scenario. If we then look at a bit of a bigger bearish scenario, we're looking for a flat and then a wave A, B, and then a wave C to the downside. So in this scenario, we can take the highs, but we then expect an impulse to the downside in a wave C. Wave A is a 3-wave structure, B is a 3-wave structure, and wave C is an impulse to the downside, where the common target area for B is between the 1.236 and the 1.38, because an expanding flat and then an A, B, C. For an expanding flat, this is your common target area between 46.1k and 45.5k in confluence with the golden resistance box here sitting between 45.2k and 46k. And for a regular flat, less common, this is your common target area between the 09 and the 105, where as you can see the 09 has been touched and the 105 is sitting at 44.8k, after which you also expect an impulse to the downside. Now in this scenario, again, if we look at the subdegree of B, we can either start counting here for a 3-wave structure, or we can start counting here for a structure, and it's not too different compared to what I just mentioned. If we look for a bigger wave B, then if we would put this wave A on this pivot down here, we're looking for a zigzag then, and then an ABC over here, right? 3-wave structure, wave A, B, and then eventually looking for a C. But this wave C is not looking too balanced because of the length in time of this range compared to the short ranges that we had over here. Now, the target area for wave C is also higher, and these highs over here did not reach the target area. So it's unlikely that this is then the high of a C. So if price reaches this area here, and therefore likely the golden box above, it will be interesting to observe the reaction. Something I do keep in mind is a potential double zigzag still, and this being somehow still an ABC, even though this being the high of C did not reach the common target area, then a three-wave structure and another ABC, but that is way too early to call, and at the moment has no probabilities because again it's way too early to call. The second scenario for this ABC would be a flat, so then we put A over or down here. So wave A moves here, and then we're looking for 3-wave A, 3-wave B, 5-wave C to the upside. But then again, over here the 0.9 has not been touched for wave B, which is not really something that you like to see. And also, if we are looking for an ABC flat structure in a bigger flat, which is the yellow count, ABC, it really lowers the probabilities for a higher degree flat. So in a bigger ABC flat, you actually don't want to see a flat inside wave B, which then is an ABC like this, 1, 2, 3, 4, 5, right? So that would really lower the probabilities of a bigger flat scenario. If we then look at the most bullish scenario from Dasa Gaming shared in Discord, WXY finished corrective structure, and we are then looking for a continuation to the upside where volume is important, because as price is then moving to the upside in an impulsive structure, we want to see volume moving with price to the upside as well. And it's going to be interesting that if these highs can be broken, we got to observe if we go into this bullish scenario or potentially that flat scenario, right? But by all means, in both of the cases, you want to see the highs taken, really. If we look at this range, then once again, we hit the daily over here, which is the final real resistance before we reach the highs. We are also above the value area high. We dipped back inside shortly, but managed to get above once more. If price does fall back into the range, probabilities, of course, increase to move to the downside, where these are some of the levels that I keep an eye on that you see here on the right. If you look at the CVD divergences, then locally, we have both bullish and bearish CVD divergences. Bullish CVD divergences here, higher low in price, lower low on the CVD, higher low in price, lower low on the CVD. And also locally, I probably have to move this up now while recording, also bearish CVD divergences, which you see here. So if I go to the AGGR chart, first of all, higher low in price, but you can also see over here, with the green candle, higher low in price, but lower low on the yellow CVD. Also here, higher low in price, lower low on the CVD, also on blue, so that's a double CVD divergence. And now here we have, not actually with the absolute high, if I can see, but with the lower high, this one, we have a lower high on price, but a higher high on yellow, higher high on blue, which is a bearish CVD. Of course, the thing is that now also here locally, we have now hit the 886. Which means any move to the downside has a higher probability of being C or Y, which increases probabilities to move up and take the highs. What price does like to do is retest the golden pocket, so that could be interesting. If it loses the golden pocket, we observe potentially a move to the downside. But if it holds here and it moves back to the 886, hitting that for the second time really increases probabilities to continue to the upside. But of course, the fact that now also we hit the 886 locally increases probabilities to take the high. So if we then finally look at the probabilities of everything that I have just mentioned on the medium time frame, we are looking for higher prices to come. Upside has higher probabilities, where at the moment I would then be looking based on Elliott Wave probabilities for the green wave 4 or the yellow wave 4, where at the moment the green wave 4 has the higher probabilities, which is this one over here, because of the length in time of the wave, well, the range here at the moment, right? Only if the range becomes very lengthy, then the probabilities increase for a yellow wave 4, but in both cases still looking for continuation to the upside and at least take the highs that we have over here at 45k. And on the low time frame, expecting to take the highs more locally, right? Expecting to take the highs that are currently on the 886. Well, I lost my box here. So expecting the 886 highs to be taken on the lower time frames, basically meaning expecting these highs to be taken, therefore increasing the probabilities to take these highs as well. And then we have to also observe the reaction. If price can take these highs, what happens? Are we going to have the bullish scenario in continuation, or are we going to look for a potential flat and a move to the downside to take these lows and look for support areas below, right? That is something that we have to wait and see based on the reaction. And what I always recommend is that if price is pushing to the upside, and imagine we're going to get another push, I want to always wait for a range or a rejection, right? Not catching knives. If price goes, it goes. I'm not in the business to catch knives, right? Have a plan, no FOMO, no YOLO on this channel here, no catching knives. Wait patiently, wait for a bit of a range, which is always good with Elliott waves, as that gives us the probabilities for what is coming next. Now, if price does move below the golden pocket, which I don't actually know which scenario that was, if it moves below the golden pocket, searching this one over here, right? If it moves below the golden pocket, probabilities do increase to look for a bigger move to the downside. But at the moment, we hit the 886 for the second time, hit a local 886 here as well, really increases probabilities to take the highs on top of this 886, and therefore increases probabilities to take the highs of the range as well. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.